Hey everyone, in this video I'm going to answer which one I think is the better artificial intelligence AI stock to buy, Palantir Technologies or Advanced Micro Devices. I'm going to compare these two AI stocks across several critical financial metrics including revenue growth, cash flow, return on invested capital, valuation, and earnings growth for the next 5 years to come to a conclusion on which one I think is the better AI stock to buy. So let's jump right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, on the first metric, which I mentioned, revenue growth, you look back at quarterly revenue growth and you can see a similar trend here for both Palantir and AMD. Their growth rates had been decelerating all the way up until roughly July of 2023 when they both turned things around. AMD's revenue growth turnaround is more pronounced than Palantir's because its decrease was more pronounced. And so now AMD is rebounding more strongly than Palantir, but Palantir's revenue growth didn't get as low as AMD's did. Now, looking forward over the next several years, AMD has better revenue growth prospects in the near term as it's going to rebound from these lows. However, longer term, I think Palantir has longer legs to run here on revenue growth given its position as a software provider to AI industry, and it's working on making its product more accessible, and as it does that, as it makes it more affordable, more businesses can afford its best-in-class service. Right now, one of the only things stopping businesses from buying Palantir services is the high price tag. It's so expensive, and so several businesses, they can't afford it. It's mainly for larger businesses right now, but Palantir is working on making it more affordable, which will give it access to more customers. AMD, meanwhile, recently launched its competitor to NVIDIA's GPU for AI. It's going to get an opportunity to gain market share because companies want to diversify away from NVIDIA. They don't want to give NVIDIA all their business. That's too risky. And so AMD is going to get an opportunity to take a piece of that market, and if it proves itself effective, it can grow and take a bigger market share. Although I don't think it's going to catch up to Nvidia in terms of performance in its GPUs, but still it doesn't need to. It doesn't need to in order to take a meaningful market share in that AI GPU market. The next thing I wanted to compare these two on is operating profit margin, and you can see Palantir making great progress on this front, growing to exceed AMD in its operating profit margin to 5.39% to AMD's 1.77%, although I believe AMD's operating profit margin will eclipse Palantir in the very near term as it rebounds from those bottoms, the cyclical bottom AMD faced. AMD didn't do well with the economic reopening, the rapid shift in consumer spending away from electronic devices, more towards away from home services, that hurt AMD significantly. Now it's recovering from that trend. As the replacement cycle begins, AMD will benefit and rebound from that. It has strong earnings per share forecasts for the next few years, which I'm going to share with you next. Analysts on Wall Street that are following AMD stock, they expect its earnings per share to grow by a robust 24.96% over the next 5 years. That's a strong EPS growth rate, to be sure. However, that is trounced by Palantir. Analysts on Wall Street expect Palantir to deliver 85% earnings per share growth per year over the next 5 years. That's an incredible earnings per share growth rate for 5 years. Now, I've said before that if you asked me, I would take the under if I had to wager over or under on this expectation for the future. Nevertheless, the analysts on Wall Street that are closest to Palantir stock expect this kind of earnings per share growth from the leading AI services provider. Now, remains to be seen if either of these two will hit these targets, but if you're looking at the vast difference, you can see 85% versus 25%. It's clear that even if Palantir misses these expectations, it'll likely still be significantly ahead of AMD in terms of earnings per share growth for the next 5 years. Even if Palantir goes down and only achieves 50%, that's still ahead of the 25 expected from AMD. So it's likely Palantir will exceed AMD in terms of EPS growth over the next 5 years, but both companies have excellent prospects over the next 5 years for earnings per share growth. If we look at cash flow from operations, Palantir's lead is significant and rising 32.01% in the most recent trailing 12-month period. And you can see it moving up quickly while AMD is moving downward 7.35%. Given that Palantir is a services business, doesn't need very much money for inventory and such, I think Palantir will exceed AMD in terms of cash flow from operations for a little while longer, at least until this rebound takes significant hold for AMD and the company recovers from the bottoms. It could then approach Palantir. It may exceed Palantir in terms of cash flow from operations. However, that will take some time, and it remains to be seen if or ever it does get back to that. But if you look longer term, you can see AMD had done an excellent job growing its cash flow from operations as well. It was just taking a longer time compared to Palantir. And that's usually the case when you compare hardware to software companies. They don't have very much cash expense, especially when you add into the fact that they pay many of their employees significant sums of stock-based compensation, which is also a non-cash expense, which further facilitates increases in cash flow from operations, although it does dilute shareholders meaningfully. I'm not comparing these two on shareholder dilution in this video, but Palantir has diluted shareholders much more than AMD has because of that factor I discussed, stock-based compensation. The next thing I wanted to look at these two on is return on invested capital, and Palantir again ahead of AMD and moving in the right direction with 6.85% compared to 1.48%. Now, compared to each other, Palantir much better than AMD, but return on invested capital of less than double digits is not good at all for companies like Palantir and AMD. However, it's good news that Palantir is moving higher in this direction. It's likely that over the next 2 to 4 years, Palantir's ROIC will exceed double digits. And AMD, you can look back before the cyclical downturn, before the economic reopening, its ROIC was above 40%. So you can expect AMD's return on invested capital to jump back higher as this replacement cycle, as the cyclicality of the industry works back in its favor over these next 2 to 3 years. Nearly all of the metrics we looked at favored Palantir in this comparison. And if I was to look at these two companies and they were selling at the same price, Palantir would be a no-brainer because it demonstrated better performance compared to AMD, and given that it's a services business, it deserves a slight premium valuation compared to AMD, but they're not trading at the same valuation. If I look at the forward price to earnings ratio, Palantir is nearly twice as expensive as AMD. Palantir is trading at a forward PE of 59, whereas AMD is trading at a forward PE of 32.44. So this decision becomes much tougher because they're not trading at a similar valuation. Palantir is clearly the better performing business, but it's also significantly more expensive, and so it becomes a tougher choice. In my opinion, I don't think Palantir deserves this much of a premium valuation over AMD. If Palantir was trading at a forward valuation of closer to 40, 42 maybe even, I may have chosen Palantir. But at this much of a premium valuation, if I had to pick between these two AI stocks today, I would pick AMD because the cheaper valuation more than compensates for the lower performance vis-a-vis Palantir in this comparison. Nevertheless, both are excellent AI companies. However, if I had to pick one, I would pick AMD. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.